Good morning, everyone. It's Monday morning, 7:30. I'm Vince Lancy, and today we're going to talk about the silver tsunami and why we could have a lot further to go. Let's start with the markets. The dollar is 103.62, up 16. 10-year yields are 412, spot 8, up 4. S&P 500 is 584.2, down 22, 58.42. The VIX is 1919, up 1.17. Gold is 27.36 on the highs, 15.60. Silver outperforming again, 34.05, cracking 34. Last night I noted that was the first time it's been over 34 since 2012, I believe. All right, copper, 442, up almost 5 cents. Gold, silver lower. WTI 71.05, up a buck and a quarter. Natural gas 228, up 6 cents. Bitcoin down 679 at 68,350. Ethereum 2709, down 35. Platinum and palladium are mixed. Palladium is down almost $9 at 1071, and platinum is 1019, up 5 and change. Grains are all up. Wheat is the strongest, 589.7, up 7 cents, 1.2%. Corn is up 3 cents at $4 even, and soybeans are 9.84, up 7 cents, but that's still less than 80 basis points. Okay. Silver tsunami, why it can continue, and the analysis will be the China-US silver tsunami manifests, or tsunami in general. All right. Let's start with this. Front page, I linked this because I just like that picture. That's an AI generated picture. And this is the tsunami that we talked about last week. And today we're going to show you how it manifested, how it is manifesting, and why this has legs, why this silver rally has legs based on data and evidence. Okay, let's start with this. This is the gold chart for the last month. Silver is the white line chart laid over top of it. Silver is up 8.63% in the last month, and gold is up 3.75%. So, in the last month, silver has eclipsed gold, which was the highest performing asset class on the planet, as far as Michael Hartnett's concerned. And now that would mean silver is. So, let's move to the next chart. That's a very nice chart there. All right, why can silver continue rallying? Other than, we all know the technical story. There are several technical stories. We have a structure that we just broke out of. We have a channel that we're in going up in gold. And we have momentum on our side, courtesy of the analysis by Michael Oliver. I'm going to give you the monetary situation that's going to give you understanding why it's going to continue happening. There are two reasons why silver and gold and oil and everything else that's not interest rate based can continue higher. But silver, up 6.4% on Friday, is the one leading the pack now. All right. There are two reasons, and those two reasons are the previously mentioned tsunami post. China and the US simultaneously have opened their purse strings. China is doing what we would call helicopter credit. Helicopter money, but they're not handing them the bills yet. The US is doing what I believe is going to be a dollar crush. I'm going to go through those very succinctly and show you what happened the last time China eased. That's going to be the part that matters, I think. That's going to be the part that's going to jump out at you. China helicopter credit. Now, China's fiscal policies that they just implemented and monetary policies are designed to help households and stocks. It's a Main Street aid, not a Wall Street or whatever their street is. The fallout will be freed up cash everywhere and impulsive buying of what went up last time. So households have less debt to worry about. They have more money freed up to buy stocks. They're going to buy stocks, but they're also going to buy what went up last time. What made them money before? Silver. What made them money before? Gold. They're going to buy those things. Their bankers are going to buy those things because their bankers trade their capital. Their bankers, which have trillions of yuan in bonds, are taking those bonds and giving them to the PBOC and saying, give me the cash. I'm going to buy stocks with it. And they're also buying silver, and they're also buying gold. Okay. Why is that specifically important for silver? Well, you may remember months ago, I identified the Chengtong trader as a kind of China Hunt brother. And he stepped into silver in a big way right about the same time he stepped into gold, which was in March of this year during the U.S. macro discretionary fund buying. So it's kind of like the Western macro discretionary fund, the bond guys, they started buying gold at the same time he seemed to. But that's what I had said then. And now I have some proof, courtesy of the market here for that. All right. The China Hunt brothers stepping into silver again. Let's take a look at this chart. This is a market air chart. I haven't seen this anywhere else, and so I'm pretty big hat tip to them for having this. They use this to discuss impulsive moves in credit in China. All right. The purple line is silver itself. The orange line, that's China margin trading. So when people have eased credit, like financial conditions are eased, they'll then margin their stocks and buy more. So it's margin trading, right? And you can see that it's pretty volatile in China. And that's a decrease in margin trading. So this would be like the market's coming off. An increase in margin trading would be more cash disposable to buy things, and decrease coming off. Now, I put a little red rectangle and an arrow down there. March 1st is when the last impulse for credit increased substantially. You could see that upwardly sloping orange line there. And the purple silver line rallied $6. In fact, the credit, this is why I think this is a really nice little indicator here. The credit actually started to move before the market. It might actually be a reasonable leading indicator. Now, it was during this time that U.S. macro and global macro discretionary funds bought silver and gold, primarily gold, to be fair. But somebody bought silver as well. And that's who we believe was the China Hunt brother. Now, then you could see as the margin impulse backed off, this is the sloping line down here, silver got very volatile, but never came off. So meaning market rallied pretty much in a straight line during the increase in credit. And as the credit impulse came off, the market dropped, but it stabilized at a much higher price. And that's because other people got interested. And that's because there are too many shorts. Some of them are on the bank side. Now look on this side over here. Look at that credit impulse. That is margin money being freed up to buy other things. Kung Fu Grip, G.I. Joe, I don't care, whatever you want to buy. But you know what they're going to buy in China? They're going to buy silver. Okay? Silver is the best metal in China. Aside from the fact that they have a history with silver. Unfinished business is what I call it. China loves base metals when they have a fiscal impulse because, they were builders. They were builders of roads and buildings. And so that's why you would buy oil, you'd buy steel, you'd buy iron, you'd buy rebar, you'd buy copper. And China proper, PBOC, is buying gold ostensibly to secure and make more solid their currency as an alternative to the dollar moving forward. So silver sits in the middle. What was the most hated metal in the world because, well, it's not quite precious, it's not quite base, is now the best of both worlds. So what does that mean to this picture? That credit impulse, not even measuring that credit impulse in a pro rata fashion, The last time we had a credit impulse this steep, not at that magnitude, silver rallied $6. So I'm going to say to you that silver can go to $40 without anything else happening right now. That's it. What would gold go to? Well, what did gold go to when went from March 1st to May 1st? It's got like $300-400 in it. Okay, so that's the Chinese tsunami. That's the China money coming in, right? Unless it falters, that's what's going to happen. All right. So, conclusion. This is about China. China needs its people to invest in themselves, and they are doing that. China also needs to find a home for the goods that it manufactures, and they will do that next because this is a mercantile world, and you need to find someone to buy your stuff, and they're not going to be buying American stuff anymore. The second part, the dollar crush. The dollar crush is going to be easier for us to see because we're living it and feeling it. The Fed, due to political pressure, I believe, cut rates prior to the election to get it out of the way before the actual election itself. They cut rates 50 basis points. They'll cut another 25 basis points, most likely. In doing that, they reduce their interest expense to more manageable levels. The interest they're paying on their debt decreases. And this is the bonus, and I'm not alone in this. Michael Hartnett said that this weekend. The Fed began to knock real interest rates down, which is bullish for stocks, bullish for gold, bullish for silver, and bearish for long-term bonds. And what has happened since, I'll put this chart, you can look at this chart while I'm talking about this. Since the Fed lowered 50 basis points, short-term rates dropped. So your money market dropped 50 basis points, and a lot of people took their money out of that and put it into 90-day T-bills. But nobody bought long-term bonds. They sold long-term bonds. Some people put their money in gold. Some people put their money in silver. Some people put their money in stocks. They're putting their money in things that will do much better compared to interest rate sensitive assets. As the Fed lowers interest rates at the short end, they've essentially given up the fight, thrown in the towel on fighting inflation on the short side. There are two ways you can fight inflation. You can fight inflation by raising short-term rates and strangling money so people can't borrow enough to do what they have to do. Or you can let long-term rates rise to fight inflation. Now, the long-term rate rising thing is a lot slower and a lot longer to do, and it brings with it a lot of pain, like gold rallying to $3,000, like silver rallying to $50. That manifests here. The red line is Fed funds. The blue line is real interest rates. Real interest rates are 1.5%. So even though prices are high, right, they're not coming down, their rate of increase has slowed to the point where you're actually, if you're still working, you're getting paid more than the rate is going up, of inflation is going up. So you're actually saving a little real money. Our savings are the government's losses. If we save, they lose. The Fed needs to get that rate down to zero and negative, preferably. See that? That's where they want it to be. They want it to be down there at about zero. There's only one way to protect yourself if you do that. Only one way, and that's to buy assets that are denominated in dollars. And the assets that are denominated in dollars are stocks, not interest rate bearing assets, commodities, and stuff. But let's start with stocks. You're going to take your money out of bonds. You're going to take your money out of cash because cash is trash. Cash is going to become trash. And people are going to put their money into 90-day T-bills. That's what they're doing now. And then they're going to say, oh, they're going to lower rates again, or rates are going to start to, inflation is going to stabilize at 3% and rates are going to keep coming down. Before you know it, you're losing money again if by doing nothing. And so people are going to start putting their money in things. The only things that they can put their money in that can guarantee them, guarantee is a strong word, but you know what I'm talking about, guarantee them a hedge against inflation, against dollar debasement, without the risk of equities, management and companies, and that will be gold and silver. So you've got China handing money out via helicopter, right? Helicopter G, I guess. You've got the Fed lowering rates. You've got the tsunami, and the tsunami adds $6 to silver, and it adds 300 or more to gold. That's what I have anyway. All right, that's it. Moving on. News and analysis. We put out several stories over the weekend. This morning, we put out the swap dealers barely participate again at the CFTC Commitment of Traders Report analysis. Essentially, in a rally, the swap dealers who are normal to sell only sold, say, 4,000 contracts. But in a drop, they'll buy 20,000 contracts. That's because they're short and they're nervous. In fact, the swap dealers actually covered silver. The swap dealers started the rally last week in silver. Hartnett gold's to head well above 3,000. Public hedges inflation risk. That's exactly what we're talking about. If the public hedges its inflation risk, gold will go well above $3,000. Gold locked up and silver locked in. That's a story that we just did. Describing Friday's activity. Data on deck this week, a relatively light week, a lot of speakers today, leading economic indicators today. The big days will be kind of mixed. PMI and home sales on Thursday is probably your biggest, double whammy. Let's check the markets again. We haven't looked at the actual charts today, but you can see how busy that is. All right, here we go. All right, starting with gold. Here's a monthly chart. There's a little bit of a channel that I've drawn there. It's very steep and it doesn't look sustainable, but let's just back up a little bit and take a look at it from a weekly. This is a market with marching orders. Let's go to the daily. Not so steep now, especially when you look at the context of the rest of the chart. Silver market is on, oh boy, the silver market is on 2,900 by the end of the year if it stays in this channel. Now, it could go as low as 2,650 tomorrow, but nothing has changed if that happens. Remember what I said before. Touches base, it gets ahead of itself. It touches base, it gets ahead of itself. It touches base, it gets ahead of itself. This is the market. Let's move to silver. This line here, that's the high from December, the month of December 2012 that we eclipsed on Friday. And, well, I had said last week above 3150, we should get the 3250, no problem. And I hedged myself a little bit the day it happened, which is kind of cool. But we did get the 3250, no problem. Now I believe if 3250 holds on a monthly basis, which is really only 2 weeks away, then you're going to see 3564 in really no time at all. Full disclosure, I'm not speculatively long silver right now. I'm very miserable about that, but I am long gold. I usually buy silver on the dip after the first breakout. So let's hope I get one of those. So gold is up 14 and change now. Silver's up 31 cents. I would say this. Well, let's go back to this. The BRICS event, I still maintain the BRICS event is a sell the news event. Does not mean we're going down. It just means people will sell the news. The question is who will buy, and I think it will be the China Hunt brother and the U.S. investor, because the secular and macroeconomic drivers in this market remain fully intact. So a dip between the BRICS and the election might really be a nice buy. I'm not sure. Today, I'll be sitting down with Chris Marcus and Matt Riley to discuss the BRICS Summit at 2 o'clock. I'm not sure when that'll air, but that should be fun. All right, thank you very much. Have a great day.